Hi everybody, Dave Aquino with Bscam Trading. Just looking at the overall market today, just want to highlight the fact that we got a CPI number that was in line with expectations, um, and not any. It wasn't the type of move that the markets were looking at an outstanding result. The CPI rose 3.1% in November, and it actually was supposed to remain flat month over month, but it actually increased by 1/10 of 1%. So it wasn't an outstanding number, but I think it was in line enough so that the market can continue this bullish trend here. Now, it's kind of out there already how the market feels about, the state of inflation and what they're thinking about the Federal Reserve. They're not anticipating the Federal Reserve raising interest rates. And as long as the Federal Reserve doesn't surprise too much in terms of the forward projections into next year, the dot plot of expectations of where they see interest rates are going to be in the quarters ahead, unless we get a very hawkish number or a hawkish view, the market could easily continue higher. This is almost no fear of getting derailed since we broke 4,600. And I would possibly watch this for a continuation move higher. Now, if the Federal Reserve shakes things up, is a little bit more stern and hawkish than expected, the market could start to pull back a little bit. The large cap tech has been generally pulling back a little bit. You can see that little pullback here in Apple. You had some pullback in Alphabet right here. You also have a very similar pullback in Tesla. Tesla looks almost weak right there on the daily chart. NVIDIA has been stumbling a little bit, pulling back to this ascending trend line. And here's Microsoft. Also stumbling a little bit in consolidation. There is clearly bearish divergences on what we call the Magnificent Seven, the seven most important stocks in the S&P 500 and the NASDAQ, and they're not looking at brand new highs like you see here in the SPY. I'm sorry, in SPX and in the QQQs. You can see the breakout here, and in the Russell. The indexes are kind of going a little bit, and this is bullish here on the Russell. The indices are kind of going a little bit crazy. And I would be really, really cautious with that, because if we get continued weakness in these major large cap tech, there's going to be a drag in those indices. And we may be just fizzling out here. Again, you have to watch this momentum. Here in the SPX looks okay, but the NASDAQ, it is a little divergent. So we just want to be careful, pay attention to the market's reaction to the Fed. And I think by 3 o'clock tomorrow, we'll have a good feeling for where it's going to go into the rest of the year. Okay, thanks a lot.